A very good morning, good afternoon, good evening to everyone. Welcome to the second session of day 3 of the International Conference on Inclusive Insurance. It's actually session number 10. The name of this day, or the focus of this day, is the challenge of reaching the client. In this session, we will be talking about distribution and technology. In the previous session, for those of you who have not attended, we're talking about very interesting education approaches to reach the client, to help him understand the product and to create trust in the product. And now we will be talking about the very important topic of distribution and technology. Thanks to all the panelists for joining. We're covering 11 time zones from 6 o'clock early in the morning in Argentina to 5 in the Philippines, 5 p.m. in the Philippines. So thank you very much for getting up early for us and staying up late. I would like to welcome Richard Leftley, Executive Vice President of the Microinsurance Company in the UK. Thank you, Richard, for facilitating that panel. And I hand over the microphone after I walk quickly through the housekeeping slides. So please, everyone, mute your microphone while one is speaking. The session is being recorded and we'll make it available on the conference website. Please use the Q&A feature to ask questions. If you have a comment, you can put it in the chat, but if you have a question to the panelists, please put it in the Q&A. If you have any comment in the chat, make sure you send it to everyone and not to only individual, because otherwise the fellow listeners of that session can't see that comment. But again, questions in the Q&A, please. And for technical issues, please message the MIN executive team via the chat. Thanks for listening. Welcome again. And Richard, the floor is yours.
Thanks, Dirk. And good morning, good afternoon, wherever you are around the world. Thank you for joining us for this topic, which I feel is probably of vital importance. That's not to say that there aren't other challenges that are faced when we're talking about microinsurance, but I've become convinced that this issue of distribution is the central challenge, is the one which we really have to crack if we want to be successful. And I think there's plenty of examples of terrible products which quite frankly have succeeded in reaching quite significant scale because they got the distribution right. And conversely, there's also examples of really great products which never really succeeded because distribution wasn't really given the attention that it's needed. So I think it's very true. I think we'd all agree that no one really wakes up in the morning wanting to buy insurance. And as a result, if we don't get this distribution piece right, then, people will default to their position of, I don't have insurance. I don't know anyone who has insurance. Why should I take insurance? So that's why I think that distribution is so critical. And of course, we also know it's a challenge. It's not an easy thing to do, because if it was, then 97% of the population of the world wouldn't have any insurance today, right? So people would have overcome this. So this is clearly a big issue, and technology is helping us to overcome some of these challenges. And we've got a fantastic panel with us today. We've got 4 speakers. I'm not going to introduce them up front. I'm going to allow them to introduce themselves. In part because I think, I will do a bad job of introducing them and they'll do a better job of introducing themselves. But we're going to start today. What we're going to do is Kate from Semfree is going to give us a bit of an overview of the topic, and so that we've got a kind of good solid foundation for us to base our discussions on. And then we're going to have 3 presenters from pretty much across the world, from the Philippines all the way out there in the east. We come a little bit towards India, and then we go all the way to Uruguay, missing out the boring bit in the middle, which is Europe. So, but not Africa. Africa is not boring at all. In fact, Kate's covering Africa for us. So we've got the bases covered here, folks. So without further ado, Kate, do you want to take us forward and give us a good foundation for this discussion?
Sure. I'm just going to ask Ashir to share my presentation for me. So you can pause here for a second. First of all, welcome everyone to this session. Richard, thanks so much for putting this together, as well as Dirk. I know it's quite a bit of effort to get the conference going remotely, but we're all really happy to be here. My name is Kate Reinhardt-Smith. I'm an engagement manager at a think tank based in Cape Town that works on research and financial sector development called SINFREE. So I'm lucky to be based in Cape Town, South Africa, where it is a very normal time of 11 a.m. and very sunny outside. But let me just get straight to the point. So as Richard said, I'll be speaking a little bit, giving a bit of background about technology distribution and inclusive insurance, and setting the scene where our other panelists will talk about their specific innovations in this space. So just a little bit of scene setting is that the 2021 Landscape of the Microinsurance Report noted that between 179 and 377 million people across 30 different countries were covered by microinsurance. While this is an increase from the report in 2020, it is really still only about 6 to 14% of the potential market for microinsurance. So there's still a large gap here. And the general consensus, as Richard said, is that this is a delivery problem. But the question is, why is there a delivery problem? Ashir, if you go to the next slide, please. So there are quite a number of challenges faced by the inclusive insurance sector to grow. And this is really driven by the fact that many of the potential customers of inclusive insurance products typically operate outside of the traditional financial service system. So they might not necessarily have a bank account. They're likely to be self or informally employed and may not possess formal identification. But one thing that we have found is that increasingly they're being connected with things like technology, so mobile phones and apps, which I'll speak about in a little bit more detail later. But all of these things, like the fact that they are not traditionally included, makes these types of customers particularly hard to reach, as there aren't many physical touch points to enable the selling of insurance. And in many cases in microinsurance, that's an inclusive insurance that's necessary. These factors also contribute to the fact that it makes it more challenging to design products, and it's a bit expensive because there is limited knowledge on potential customers. So all of this leads to kind of these four overarching challenges, which I mentioned are faced by the inclusive insurance sector to grow. So the limited reach and lack of access to customers are kind of the key major ones when it comes to distribution channels and inclusive insurance. So I think, Ashir, if you can go to the next slide, please. So this slide just sets out the different types of inclusive distribution models. And if you look on the left-hand side, there has been a bit of this slide just shows kind of the evolution of different types of distribution models. So on the left-hand side, there are distribution models that use the least amount of digitization and technology. And these are things that we saw as the main way to distribute insurance, microinsurance and inclusive insurance, probably several decades ago. So this was the direct agents and direct sales, the microfinance and community-based organizations, retailers, and postal networks. So these types of distribution channels typically require that face-to-face interaction. And it's not to say that these aren't still ways that inclusive insurance can be distributed and sold. But what we have seen over the course of the last few years, and particularly in light of COVID-19, we've seen a bit of a shift in inclusive insurance distribution, where insurance providers are leveraging and are partnering with tech-enabled players that have access to a large number of potential customers. And this is where the value chain players, the remittance service providers, the mobile network operators, and digital platforms really come into play, and where their extent of digitization and use of technology to reach customers has been leveraged by the insurance industry. So if you go to the next slide, I'm just going to give you a few examples, really what I see as quite exciting examples in this space, where we've seen inclusive insurance be distributed through more tech-enabled means. One example of this would be digital platforms. So multi-sided digital platforms connect buyers and sellers of goods and services. In 2019, we did a study in sub-Saharan Africa that looked at 8 different countries, and we mapped all of the multi-sided digital platforms. And we found about 365 different multi-sided digital platforms in just 8 countries, just to show you the sheer magnitude of this opportunity. And what we found is that actually already 16% of these 365 platforms were already offering insurance. And this number is likely to have grown significantly since then. So we're already seeing this as a major and viable distribution partner for inclusive insurance. I think just to highlight one example of this is actually Gojek in Singapore, which was initially founded in 2010 as a call center to connect drivers and customers. And this eventually evolved into a multi-sided digital platform and an app that started by connecting 4 different types of servicing: riding, sending, shopping, and delivery, and now has over 20 different services. They have offered multiple types of financial services in the past, but they've recently actually even created their own insurance component of the app called GoSure with an insurtech called Pasir Police. And from this app, you can actually purchase insurance directly just with a click of a button. And it offers 9 different types of insurance policies ranging anywhere from crack screen to hospitalization. So that's just one really interesting example of where inclusive insurance has been distributed through tech. And then obviously, I think many of us are familiar with mobile services and with insurance being distributed through your traditional MNOs. This has been around for quite some while, but I think one thing that's quite interesting to note is that you're even seeing the big MNOs create their own insurtechs that are focusing on this. So, for instance, MTN, which is a large MNO, and Metropolitan, which is a large insurer, formed their own insurtech called AO, just to distribute insurance through mobile phones. So it's showing that this isn't just new entrants thinking about this. It's actually some of your major players, even though Metropolitan recently did exit the partnership, but I think it's just showing that there's quite a viable space here. And then another one that I wanted to highlight is your cross-border payments companies. So this would be your remittance service providers. Insurers are increasingly seeing these remittance service providers as a key partner for inclusive distribution, particularly in developing countries, as these remittance service providers aggregate large numbers of customers, mostly migrants. One example of this would be your AXA, who has partnered with westernunion.com. So it's all enabled online to offer free life and disability insurance to migrants who send to 10 different African countries. So if the migrant in France passes away or is disabled, the payout actually goes directly to the remittance recipient in one of those African countries. And I think we're going to see a lot more innovation in this space. And at least from many conversations with insurers over the past year, it's definitely seen as an increasingly viable inclusive insurance distribution channel. And then I feel like Rich is going to tell me I'm running out of time soon. So I'll just quickly go through the last example that I have here, which is really interesting. It's a little bit less use of technology in the example that I'm going to talk about, which is value chains, but I'm sure many of us are familiar with Pula, which is an insurtech that offers crop index insurance in sub-Saharan Africa. They actually have partnered with the input dealers, so the seed dealers and fertilizer dealers, to offer embedded crop insurance to farmers. So it's just a way of using a value chain player who already aggregates these individuals and has a captive audience to offer insurance to protect people. And I know they've seen quite good success in the amount of claims that they've paid out. If you can go to the next slide, please. So I think that Richard has it right. You know, there's a lot of examples where bad products have been sold and good products haven't, because they haven't gotten distribution right, or they have. And I think partnering with the right distribution channel is key, particularly if they use technology, as we see many people who are potential inclusive insurance customers being connected via apps or mobile phones, in some instances the internet. And all of this can lead to insurers being able to leverage their distribution partners to have integrated payments and communication channels, customer data, which makes it easier for them to design products that are better fit for purpose and more aligned to the needs of their target market, and also lead to new types of digital financial service use cases. So I think, just to sum that up, if you can get distribution right and also get distribution right with a tech-enabled partner, you can find that it can lead to increased collaboration among the different players across the different sectors, leveraging that established customer base, overall increasing efficiency and economies of scale. And I think kind of most importantly, creating new markets and new products that didn't necessarily exist previously and improving the customer experience. So I think for me, the distribution question is a really important one. And we have some really good examples of where different types of channels have been leveraged. And I look forward to hearing the other participants give us an overview of what they've done in this space and some of the challenges that they faced and how they overcame them. So let me pass on to Richard to introduce the next panelist, but thanks so much for having me here.
Thanks, Kate. Never disappointing whenever we hear Semfrey talk, and just such a depth of experience, and it's great to have someone who is coming at it as a kind of independent third party, looking at the different models. It's a really, really useful kind of start to the session. If you did a great job on time, I have to say. So I'm gonna ask you a few questions, if that's okay, because I definitely want to have a question, a good time for question and answer at the end. But before we kind of move on, it's really interesting that you highlighted in one of the slides around the different kinds of partnership models. And for example, I mean, I think you used at both ends of the spectrum. I think there's the kind of having the distribution partner as part of your shareholder base. So you used IO as an example. You could also use Passive Police as an example as well, right? Where the distribution, so the telco or the ride-hailing company, is actually a shareholder in the insurtech, and therefore they have every incentive to try and push the insurance. And at the other end, you mentioned Pooler. There are plenty of other examples we could have talked about, but Pooler is certainly an example where, as far as I know, they don't have an investor who is also a kind of distributor as such. And therefore they have to go partnership by partnership and create each one of those. Obviously, there's pros and cons. Have you, I mean, this might be slightly an unfair advantage. I mean, if you had a choice, where would you be on that? Is that a critical component as we're looking at distribution? Do you have any kind of thoughts about that spectrum and where people should be aiming for on that spectrum?
Yeah, I mean, I think you raise a really good point here. And I think the answer is there are pros and cons to both. So if you're only working with one distribution partner, you're reliant completely on them. And in many instances, it's not necessary, they don't necessarily have a share in the insurtech or the product or the service. I mean, obviously there's some benefit that they see to their company for partnering with you, but they don't have the same invested interest as the insurance partner or the insurtech partner. So I think it's putting a lot of eggs in one basket if you're really working on just one. But obviously there are real benefits to partnering with, for instance, the MTN or you are the AO. You have millions and millions of customers. So I think there's that benefit. But on the other hand, diversifying your distribution means and partners means a lot of effort on business development, a lot of effort in partnership development. I mean, you need to have the right person for that. But I think that there are lots of benefits about being diversified in this, that if a partnership falls through, it's not going to ruin your business. If all of a sudden, something happens with that specific product and people don't trust it, or they don't trust the distribution partner that you had, the one that you partnered with, it's not over for you. So I think that there's probably a happy medium in my mind. I mean, I'm not an insurer or an insurtech, so this is just my guess as an independent audience on this.
Yeah, no, thank you. It is a difficult question to get right, and maybe at the end of it we'll ask each of the panelists where, if they had a chance, if they had a choice to rewrite where they are on that spectrum, where they would choose to be. It might be an interesting question. By the way, in terms of questions, please do put your questions. I'm actually going to time the session depending on how many questions we get. So if we're not getting questions coming in, we're going to have a Q&A at the end, and I'm going to let the panelists talk longer. So if you want them to shut up, then please start asking your questions, because then I'll know there's plenty of stuff for us to talk about, and I'll make sure that they stick to time. Okay, so on that, then I'm going to hand over to Bala. He is the head of rural and microinsurance at SBI General, one of India's largest, most long-established insurance companies. He's been around in this industry for a long time, should be a familiar face to many of us, and really knows his stuff. And I'm excited to hear about him talk about his experience with what I think is a unique sales channel. So Bala, over to you, and yeah, please do give us your presentation.
Yeah, thanks, Richard, and very good morning, good afternoon, and good evening to all my dear friends who have joined from different parts of the world. So let me share my PPT first, and then I guess is my PPT visible? Yeah, thank you. So as Richard rightly mentioned, I represent one of the fastest growing general insurance companies in India, SBI General Insurance, and we are a sister concern of our parent entity, which is SBI Bank, which is, I would say, one of the top 50 banks in the world, and we are the #1 bank in India. And since we come from the government backing, we have a lot of, I would say, social obligation as well as rural focus in terms of micro insurance and as well as other rural related products. So here I will be talking about two different distribution models, what we have tried, and we have been successful in that. So one is a direct assisted model, wherein we do insurance through kiosks. And the other one is a direct customer buying model, where we have come up with an innovative model wherein we issue policies using WhatsApp chat. So WhatsApp is one of the largest used social media platforms in a country like India. So we have leveraged that network and have tried to build in a new distribution mechanism where a customer can buy a simple policy through WhatsApp chat. So we'll discuss both these models and we'll cover the WhatsApp chat direct model in detail. Just to give you a quick overview of where we stand in terms of insurance penetration in India, we are a very large country with great population, but still the insurance penetration is less than 1%. And as we all know, it's basically because of the accessibility issues, the awareness issues, and adding to that is the complex buying process of an insurance policy. So it's all, the endeavor is to actually make it simple, make the product simple, make the product available at the doorstep, and make the buying journey simple. So that can be achieved only through digitization, and use of digital technology is something that is helping us to reach out to each and every customer. And internet usage is one of, I would say, fastest growing thing in India, and around 47 million population has already using internet, and around it is expected to touch 630 million users by 2023. And we are the second largest online market. We are one of the I would say largest markets for all social media platforms like Facebook, WhatsApp, Twitter, whatever we use in this segment. And coming to, I will directly get into the digitization process that we involve. So as I said, this is one model that we have tried and tested and successfully is the direct assisted model, where we have kiosks or small centers which are present in each and every nook and corner of the country, which are being set up for various financial inclusion services. So two such models are, one is the Common Service Center, which is CSC, which is a Government of India backed program, where we have around 200,000 centers across the country, which provide various financial inclusion services, plus various government related services. People can walk into these centers for multiple services like mobile recharge, Dish TV recharge, online tickets, various government services. So the walk-ins are there, and we use that distribution mechanism to sell insurance. We have a digital platform which is integrated with their platform, wherein the center owner assists the customer in terms of entering the details, make the payment online. He collects cash from the customer, but he makes the payment on behalf of the customer with an online mode, and the policy is generated on a real-time basis, and he can just download and take a print and hand out to the customer. So that is one model. We also depend heavily on the business correspondent network of banks, because wherever banks doesn't have their direct branches, they have similar small centers where they operate on behalf of the banks to actually open an account, deposit cash, withdraw cash. So we use such network also to promote insurance. Since they have walk-in customers who comes in for other services, they actually use that platform to sell insurance. And right now we issue closely 50,000 policies a month through these platforms, and around the activation levels is something that is challenging for us, because to reach out to so many centers physically is not possible. So somebody has to go there, somebody has to train them to actually in terms of how to issue a policy, as well as to train them in terms of the product features. So that is one of the challenges that we are facing in this network, but still long way to go, but we have been successful in promoting this model. So this is one model that we have done in terms of distribution digitally to rural areas. The second one, which is the new innovative idea, what we have done is the direct sales, where the customer can himself issue a policy through a simple WhatsApp chat. So in India, there are approximately 340 million WhatsApp users, and most of them use it for multiple, it's more for chat, it's more for transferring information. They have WhatsApp groups, like all of us, we all use WhatsApp for communication. So why can't we use that platform to trigger insurance sales? That was something that we thought, and we did it as a pilot along with WhatsApp company directly. And it's a simple process wherein the policy buying and policy issuance happens through the chat. So we can actually design this chat in as many languages as needed. All the data that is required for policy issuance is captured via chat. So if I can share few screens of how it works, it triggers through either a QR code scanning or a simple trigger SMS to a dedicated WhatsApp number. And the first question is asked is your name. Then maybe you can type your email ID, because mobile number is already there along with the chat. Then the next question is regarding the product. Which product would you like to buy? If it is a health product, then select 1 for health, 2 for PA. That is something that we can decide. The current process that we have gone live is for a Arogya Sanjeevani product, which is a health insurance product, a low ticket size health product. So the date of birth is mandatory information. And then the next question comes is whether it is needed for yourself, spouse, or self plus spouse. Then he just have to enter, the customer has to enter just that numeric against that. So if I need to take only for self, I just have to type 1. If I need it to take it for my entire family, I just type 4. Then the next question comes is the sum insured. So if you, what sum insured do you like to buy? So if you want to buy just a 100,000 INR sum insured product, then the premium is also shown in that. Just select the number. So if I want to select a 200,000 rupees insurance product, I just select 2. So then that gives the confirmation to the insurance company that this product has to be bought. And similarly, all requisite details are captured via simple WhatsApp chat, or just click of a button. All the relevant details that is required for a proposal form is captured through here, and the payment is done online. So in India, we have WhatsApp Pay, but that is still yet to be popularized, or it's not yet in the public platform to be used by everybody. So that is one challenge right now where we are facing. Since everybody is not using WhatsApp Pay, we have to trigger an online link for making the payment through some other online mechanisms, maybe through internet banking, credit card, debit card, whatever it is. Especially for rural customers, the internet banking is not available. But definitely when WhatsApp Pay becomes common, then this journey will be seamless, because people can just pay from that chat itself, select pay by WhatsApp Pay and pay the premium and download the policy then and there itself, and it is sent as a WhatsApp message itself. So this is in simple terms, it is just an issuance journey where we take the details in all other models. We are capturing the details in a proposal form format, which is there in the portal. So here we have changed that concept to chat, where the customers provide the data required for policy issuance through a simple chat. Coming to the uniqueness of the journey, or the journey till now, yes, it's first of its kind, where the WhatsApp chat is used for policy issuance. I haven't seen this anywhere else, and it's simple, user-friendly process which can encourage direct selling. So if somebody is just sitting and doing some WhatsApp chat, and if he can be forwarded some message saying like, if you want to buy an insurance, just click the link and maybe he can just chat through the WhatsApp and issue a policy. And it can be designed in multiple languages, because in India we have multiple regional languages. So regional language will result in better reach, better adaptability, and easy access to products, and making them available in fingertips is one of the uniqueness, because we don't want any distribution channel or a distribution outlet at any place to actually source this product. Yes, there are challenges since it is the first time. The design itself had a lot of iterations, because if you make the chat journey lengthy, people will become bored. The limitation is about asking bare minimum details that is required for policy issuance. So complex products might be difficult, but straight through products which require bare minimum details, they just like customer name, address, and date of birth and nominee details, such products can be actually sourced through this particular platform in a very easy mode. As I said, payment mode is a current challenge because WhatsApp Pay is not so common. So that is actually triggering the, or maybe that is actually a bottleneck as of now. And making it customer friendly, as I said, the design of the flow is all that is important. If it is lengthy, if it is complex, then it will not work. So it has to be as simple as possible. We had a lot of changes. We had made a lot of changes, a lot of iterations in the current process that we designed. So that was a learning experience for us. And also using radio buttons instead of chat. So all those kind of innovations we can bring in to make the journey as simple as possible. Coming to the project results, this is was under a beta testing mode, and around more than 1,000 policies have been issued within few days of rollout, and it still continues. It was unveiled in the Facebook Fuel of India campaign last year, 2020, and it is actually considered as a game changer in terms of how we can reach out to the last mile, or how we can reach out directly to the customer for policy issuance. So a lot of learnings. We are in constant mode of learning and improvement and changing the process flow. But right now, as I speak, I guess we have finalized at least one product is live and it is going, and we are in the mode of adding at least 3 more products in this current process. So that was quickly from my end, and I'm happy to.
Yeah, Bala, thank you so much. That's a really, really interesting presentation. Congratulations on a really unique channel. I've got a number of questions, and I'm sure that other people will as well. But I had one question from Dirk. Unfortunately, he can't ask the question because it's one of the downsides of being a presenter is that you can't actually type a question. So his question was kind of why did you decide on using WhatsApp as the way to market as opposed to designing your own app? You know, I think I know the answer to that, but I mean, I'd be really interested, you know, what was the benefit of kind of all the pros and cons of kind of ceding control of the environment to WhatsApp versus SBI kind of creating their own kind of version of WhatsApp, if you like?
So here, the important aspect that we looked at was the customer base who uses WhatsApp. So in India, the number of people who are using WhatsApp is very high, almost.
Yeah, so the people are using WhatsApp and they trust WhatsApp, and then why are they going to download an SBI app? You know, because they're using WhatsApp for lots of things, right? Already. And so leveraging on top of that means that, you know, whereas if they downloaded an SBI app, they might use it once or twice, but they might then just delete it because there's a limited number of apps that they can have on their phone. Is that a fair way of looking at it?
Yeah. So here we don't need any downloading of any app or anything. We are using the existing WhatsApp mechanism that we use for other chats and other things to actually issue.
Good. So I've got a few questions. So let's just kind of rattle through them quickly. So do you use any machine learning or AI? Because obviously you know what you presented is someone answering the questions in a logical way. But what happens if they don't understand the question, or they put something really crazy as an answer? You know, what do you then do? I mean, is there someone actually typing the questions, or is this being done in a machine learning way?
So I would say it is a simple adaptation of chatbot. So whatever chatbot mechanism that we see in maybe another industry, or maybe in an airline where you want to actually download a policy, download an air ticket, or ask query to the chatbot. So similar technology is used here. So it's a chatbot based technology wherein, and we have used it in such a way that invalid inputs are less, because we are asking them to type certain things. For example, if they want to select the sum insured, they have been asked to select only numbers 1, 2, 3, 4. And other details, what we require is just the name. So when we ask, the next question might be enter your name. So whatever name the customer enters, we'll accept. And similarly, the address. So if the address is being asked, whatever data they enter as their address will be captured and will be issued. So other than that, whatever data is purely on radio buttons or numerical selections.
Okay, cool. So I've got just two other very brief questions. Then I'm going to take a few questions just now because they're so specific to you that I don't want to kind of skim over them. So when you launched this, did you just randomly send stuff out from SBI, or did you target bank customers? So what was the kind of right? Because someone's suddenly getting this random message. There has to be some like link. It can't just be like from Bala, your mate, right? It has to be like, so did it come from SBI? Did it come from as a bank, or did you send this to existing insurance customers? Kind of how did you avoid that kind of issue of being spam, if you like?
So as I said earlier, we did as a testing mode, and the testing population was selected prior in advance through a channel partner in the rural area. So we had given them the QR code to be scanned. So this QR code was there across the village where anybody can scan it, and there was an initial SMS trigger also. So it was to a closed group which we felt are using this kind of technology in the rural area who can actually test this. So it was not open to all, but right now it is open to all in terms of there has to be a trigger to actually start this. So anybody cannot.
Does the client have to? The client has to trigger it. You can't just randomly send out.
Client has to trigger. Right.
Okay,
so
fine.
it has to be either through a QR code or to a specific message that has to be sent to this particular number.
Sure. And then the final question is around payments. So they must have some kind of payments mechanism. They have to have a bank account or a card to link to WhatsApp in order to pay, right? So if the person has zero, I mean, I know in India there's a real push to the Aadhaar card. Everyone should have a bank account. Everyone should have some kind of payment mechanism. So that's in your favor in India, but they need some kind of digital payment mechanism out that exists outside of WhatsApp to link to WhatsApp. Correct?
Right. So even in WhatsApp Pay, we'll have to link our account to WhatsApp Pay so that we can get it from their account. It's like a Google Pay, simple like a Google Pay or maybe any other.
Sure. So it's a conduit, but that you have to have an account, they have to have an account, and then this is just a conduit that connects it. Okay. Look, just in the interest of time, there are some really interesting questions that I'm going to try and get to. I tried to answer some of the questions in the chat to Bala as well. I'm sorry we can't get to all of them. Okay. Max, I'm going to turn to you next. So we're going to go from India now. We're going to go to Uruguay. So Max works for Rio, Uruguay. He is you're the leader of the microinsurance work that they're doing there in Argentina. Max, tell us a little bit about what you guys are up to.
Good morning to everyone. I'm Maximiliano Selva. I'm a co-founder of estacubierto.com. It's a microinsurance insurtech, and with Rio Uruguay Seguros from Argentina, we made a microinsurance program, one of the first in Argentina. We don't have too much experience in microinsurance program, and I want to share with you this. The name of our program is Democratizing Insurance, a focus on those who need it most. About the macroeconomic context in our country, almost 43% of Argentines live in poverty. Almost 11% have the bigger economic vulnerability. And a very important number is the 70% of those with the lowest income are women. About our target market, in the negative way, they're, like you say, they're low insurance awareness. The insurance is not considered as affordable. There's a lack in trust in insurance provider. They have a little disposable income and income patterns, and the expenses as basic requirements. About the employment and education, the work activities, most of them and they're employed, informal or self-employed, and they have low education level in general. About the good things about our markets, almost 91% of our population have smartphones and use social media. They're supported by different stakeholders to achieve their dreams. They already use some risk management tools like credit, but paying higher interest rates and loans. And there are very few insurance companies in Argentina who see the enormous potential of inclusive insurance markets, despite the fact of the supervisor created a conference table with periodic meetings to encourage new products and programs. About the features of our approach, we seek to generate real value in each product designed. That is why the collection of data is important to generate affordable solution, not tied to cost only, but to rates of use that allow generating trust and referral. Our goal was generate a real impact on a specific group of people. That reason because we opening new stores in neighborhoods all around the country. We made an articulation between public, private, and the third sector. We studied and made a territorial analysis of the neighborhood, identifying the main needs to be covered both in homes and shops. We opening small stores or customer service spaces managed by residents of the community. Personalized advice for the acquisition of microinsurance or inclusive insurance products, specially designed for those who need, like home, health, life, etc. And with training in sales techniques and products for the neighbors who work at the stores. They have the possibility to get a professional career buying insurance. We already 5 stores and we're planning 15 more next year. The theme about the local places and familiar faces was decisive for many people to be encouraged to buy insurance coverage for the first time. In turn, generating employment in the community, showing ourselves active by generating service and activities, open a door for potential alliance and constant referral. The trust that the collaborators of the premises are taking as they are training is notorious, translating into better sales, a larger user community, and the possibility of establishing ourselves as a branded segment, as an intertech that provides affordability, quality, and proximity, in addition to employment programs that generated a lot of value into communities. Our product development process is very simple. We use different methods like Suave to generate the product and PACE or PASE to validate. And we made service, focus group, and interviews with residents of the neighborhood. We observed the existence and absence of services. We support from neighborhood institutions, businesses group, neighbors, etc., to establish certain solutions with service provided in situ. This is very important. The service providers in the same place when the people live, because we find a lot of troubles about get the right providers. And the result is local issues were detected, such as internal means of transport, problem of access to certain health services, the needs of good loss expenses coverage in case of power of outage, etc. Our face-to-face and physical channel is perfectly complemented by our digital platform, giving the customer the possibility of accessing purchasing processes 24 hours a day, simply, quickly, and efficiently. The platform is designed for both end customers and strategic partners and the face-to-face sales force. About our coverage available at this store, we redesigned the product based on previous research of homes and businesses in each neighborhood. For example, bicycle like the most common means of transport, home with flexible subscriptions. This is very important. In Argentina, we have more than 4 million of house who are impossible to get some insurance for the very right subscriptions rules. Health with a comprehensive vision, individual life and burial, personal accidents, especially designed for informal activities like domestic jobs, store workers, constructions, related activities, and integral store, custom-made designed taking into consideration the main characteristics of the business survived in each neighborhood. Basically, our total process is richer for the creation of product tailored to the segments, the distribution of products through local stores, and the digital platform, the structuring of alliance that allows scalability and volume, and the permanent revision of products and processes to correct deviation. And believe me, we are plenty of them. So it's very important, the revision and correct the deviation. About the program impact, the most significant results are build trust with the segments through opening a store in the neighborhood and having a familiar faces attending their needs. After knowing the local store is settled, digital interaction grows exponentially. Labor inclusion, shops are created in areas of economic vulnerability, reinforcing confidence in the industry and in the company that is settled. Public-private collaboration and with actors of the popular economy like mutual, cooperative, etc. In Argentina, they are very important. And this is the first successful experience that generates the joining of more clients. alliance with companies that target the same segments or that serve the same needs of low-income households, generating scalability. About our results, since the startup in March of this year with a single store, until today, that project has 5 locations, 1,030 policies have been sold between platform and stores. But the most interesting thing is the growth rate that occurs from September and October of this year with a 50% growth. Our goal for next year is have 20 stores and our platform 100% operational, with a queue of sales of 50,000 policies in annual sales only in Argentina. The renewal rate for policies is 70%. The loss rate at the moment is below 8%. Most of them use assistant and personal accident coverage. Default is around 18%, but it's gradually decreasing as customer service processes improve. The premises and interactions with the neighbors allowed us to collect the necessary data to optimize process and improve the products during this year. And the most important things for us, 20 job work generation in the insurance industry in vulnerable sector, a number that we hope to increase to 90 people during next year. In the most of cases, it's the first job in services that is generated. Thank you, and I'm open for all kind of questions.
Max, thank you. Really interesting. So you've kind of taken a slightly different approach to many other people within the microinsurance industry in that, I mean, okay, it's true that SBI also has kind of service centers, but they are like pushing the digital channel now very, very heavily as being, you know, a way to try and sign people up. Where does the digital piece come into what you're seeing in Argentina, and how relevant is that? Or have you found that actually the kind of in-person at the shop is the most important component in selling insurance to people who don't want insurance? Or sorry, no, don't want insurance, didn't wake up wanting insurance this morning, you know, not naturally, you know, inclined to it.
Like, you know, Richard, we have some difficulties because in South America doesn't exist the alliance with mobile operators. So it's more hard to get awareness in our segment. So the first thing we detected is the people don't buy insurance if they know the brand and if they know a familiar faces, because it's difficult for them invest a part of the incomes in some service they don't know, or they don't know how to do that. So we build trust, and we talk with the people, leaving the message, okay, we are here in your community, and the people who work for us is part of your community. So the familiar faces was very important to get the first step and pass the first barrier. It's the lack of trust. And after that, our digital platform grow in interactions, you know, because the people start to say, okay, they are this, they have a little store, so they don't run if I pay something. And even in the insurance market in Argentina, start with that, we put close to another alliance because the first months everybody showed that, but nobody say, okay, I want to work with you. So after passing months, some companies like fintech or another kind of enterprise say, okay, I want to talk to you because I know you are in 2 or 3 communities, and start to grow the numbers. And you know, this is not magic, it's not a miracle, it's hard work, and the numbers start to grow very step by step.
Absolutely, absolutely. So I want to ask one last question before we hand over to Gay. So Gilles asked a question which I think is really important. We know that women are the most excluded. We know that they're the most vulnerable. They face the most risks in their lives. So can you give any details about how you address the specific needs of women through the channels that you've developed?
Yeah, we made some surveys and focus, and we detected, for example, almost the 50% of the domestic employment are informal. The 70% have the house of the homes and on incomes. So we planify products to cover some things like health, like life, and we are planning a loss of benefits because in 2 or 3 cases, very specific, when they don't go to the job, they don't get the money. So we are trying to cover this kind of things. And about the gender, the 90% of our sales force, they are women of low income sectors, and it's the first job as services they have. So they are very happy to do that and reinforce their tools for get better jobs in the future.
Okay, good. Thank you for that. Okay, great. Thanks for that presentation. I'm sure there'll be other questions that we've come back, obviously, to you as well. So again, last, but by no means least, you are the operations manager for Cebuana Lululia in the Philippines, the insurance broking arm of Cebuana. And Cebuana is doing some amazing work in reaching out to the poorest in the Philippines with a range of insurance products. So really excited to hear about what you've been up to and to track the progress and to learn from you today. So thanks for being with us. Over to you.
Thanks, Richard. Good day, everyone. It's almost evening in the Philippines, in Manila. So thanks to the Microinsurance Executive Committee for having Cebuana in this forum. So we're formerly known as Cebuana Lulier Insurance Solutions. We've transitioned to a brokerage just like a month before the pandemic. So now we're Cebuana Lulier Insurance Brokers. Next slide, please. Just a quick intro about the Cebuana Lulier as a microfinancial organization. So we started out as a pawn shop business. We've expanded our financial services to remittance, bills payment, e-loads, of course, insurance. Probably a couple of years ago, we've embraced what we call the tech brick approach to innovate the way our client access our company's services. So this is our customer base at the moment, 31 million Filipinos, 13.5 billion of which are our loyal customers. For insurance, we have 11 million, and we've also opened banking services through our branches a couple of years ago, and we now have about 4.5 million micro depositors. So our network is 2,500 physical branches located nationwide, and we also have about 25,000 partner agents and outlets. Next slide, please. So as mentioned, Cebuana Lulier Insurance Broker is the insurance arm of the company. We've implemented a lot of initiatives for microinsurance for the past years. We've had over 10 years, a decade, years of experience selling sachet insurance product to our customer base. So next slide, please. So this is basically the market that we serve. We focus with the risk protection needs, financial services needs of the low income sector. And over the years, we've noticed that this particular customer segment would always prefer face-to-face transactions, and they would often avail microfinancial services in order to help them with their budget. So that's why for loan, we have the pawning business, and also we have some sort of loans offered by the bank, and also our remittance business, which caters to domestic and international transfers. Next slide, please. So in terms of insurance distribution, we're quite known with selling insurance, sachet insurance, through our branch network. So we've been doing this for over a decade already. So we've actually capacitated our branch personnel to be knowledgeable about the microinsurance product. Right now, our flagship product is what we call Protect Max, and we also teach them about sales techniques. And most often than not, insurance is a secondary product or a secondary transaction for our customers in the branches. They would be customers of pawning first or remittance first or bills payment, and then the branch personnel would mention to them that we also have insurance. So this is actually a mature distribution channel already for Cebuana. So for the past 2 or 3 years, we started to look for other channels or other approach to expand our customer base. And of course, next slide, please. We started looking at the digital space, particularly in the Philippines. So we checked the status of fintech and digital, and we've noticed that um, this particular space is actually dominated by loans, payments, e-wallet providers, and that there's a tiny little bit of players in terms of insurance or insurtech. And this particular number is actually a report published in 2020. So we saw a huge opportunity for expansion in terms of tapping the digital space for insurance. Given that 76% of Filipinos already have access to internet, 64% are mobile users, and we spend a lot of time browsing several social media platforms for information and news. So this is the market that we think we need to tap in expanding our outreach. Next slide, please. So I'll go over some of the platforms, fintechs, startup companies that we have talked to for the past couple of years. I just categorize them to payment aggregators, e-money apps. We also have an online booking platform, etc., etc. And to date, we already have 13 active distribution channels that are supported or front-ended by digital platforms. I'll just tell the story of about 6 of them, which are actually representative of the group that um, you see in the slide now. So next slide, please. So this is the first development from Cebuana. Actually, we tried to develop our own insurance marketplace, and we offered four product categories: car, travel, property insurance, and personal accident. And this particular platform is available in web, and we also have Android and Apple apps. So basically, the unique feature of this site is you can compare premium and products from different insurance providers, and it also offers a couple of payment options. So we're actually improving this platform. I would say that this went ahead a little bit ahead of its time. And one lesson that we can share with this platform is that we basically started with not so simple products, and we're targeting direct customers, and it's quite difficult for them to go directly to the platform and buy insurance. Most often than not, they would still want to talk to an insurance agent to explain to them how this complex insurance product works. So that's the first channel. Second one, next slide, please. So we also have another channel so this is also owned by Cebuana. So aside from the physical branches that we have, we've also activated individuals, small businesses as our authorized agent. So the interesting story with this particular channel is that we started with just developing or coming up with a bundled insurance for the authorized agents. And then eventually, before it launched, they pitched the idea of offering an insurance product that the agents can explain to their customers. So this is like a Cebuana Luwilier branch without the pawning business. So one innovation that we implemented here is that the agents are actually given an Android tablet as a device for them to input the transaction, and our insurance product is integrated via API to that particular device. And customers actually receive SMS as a proof or confirmation of their insurance coverage. Next slide, please. The second channel is quite similar to the Cebuana Luwilier authorized agent. Posible, this is an external company. It's not owned by Cebuana. They came up with a business package with a proprietary device. That particular device can actually issue receipts. So we capitalize on the availability of the receipts from the device to give the customers an automatic proof of their insurance coverage. So similar with the authorized agents of Cebuana Luwilier, we also integrated via API to this device so that the agents, whatever customer information that they inputted with the device, it goes directly to our database. So we launch personal accident and health products for Posible. Next slide, please. So for the next two channels, these are actually the e-commerce giants in the Philippines. So Shopee, for example, has a monthly number of visitors at about 54 million Filipinos. So it's an e-commerce platform. A lot of products are being sold there. And when we first deployed our insurance product with Shopee, we actually use SMS for activation because at that time we were still developing our microsite. And we started actually with a very simple and very affordable personal accident insurance. But right now, we've developed our microsite. So the customer journey, basically, the customer selects the product from our shop. It's a Cebuana Luwilier insurance branded shop. And the customer makes the purchase inside Shopee, and she's given a voucher code. And the voucher code is the one that he inputs in our microsite as proof that he's entitled to register his insurance. So the good thing about our microsite is that it has validation of some customer information like age. We've already filtered the minimum and maximum age, and we can also capture the gender or some basic information for the customers. So right now, our top selling product for this particular channel is our personal accident, which has about 8,400 certificates sold since we launched the program. So the next slide is Lazada. So this is also an e-commerce platform in the Philippines. Uh, it's also integrated to our database via our microsite, and we also issue voucher code as a proof of insurance transaction. So the good thing about this platform actually is it has a seller console or an admin console wherein you can track real time the orders that you're getting from customers. You can track how responsive are you with your customers. So as you can see in the site, um, buyers can rate you. Your chat response is actually being measured by the platform. It's actually one of our KPIs. And we also have buyers that buy insurance to give as a gift to their loved ones. So we ran this very short promo during the holiday for customers to give insurance as a gift to their family or friends. So next slide. Okay, so this is another channel story. So we have GCash. So GCash is the leading e-wallet or mobile app in the Philippines. To date, it has about 40 million Filipinos as customers or registered users. We deployed a personal accident insurance product with GCash. And the good thing with GCash, of course, is it's a very seamless, very good payment capability. It's real time, and the settlement at the back end is also very smooth. And everything is done in-app from enrollment to marketing. And soon we will be deploying the client dashboard and claims dashboard also inside the GCash app. So next slide, please. Let me just share some data of where we are after we started our digital journey for Cebuana. So these are just some observations from the customer data that we have. So 72% of our transactions actually are coming from the 3 major channels with the biggest customer base. So them alone are actually performing. So it makes sense to choose channel partners with a good set of customer in the first place. So we'll just capitalize on the existence of these customers in introducing insurance. Second one, 96% of our products are under 100 peso or under $2. So this gives insight that there's a certain set of products that acts like an entryway for insurance, something that people don't think much about. They just buy because it's easy to understand, it's affordable, and so once they get their product, you get to introduce insurance to them, and we're working on offering to them much more complex or insurance coverage with longer term. And third insight in terms of marketing, which I think is very important when you activate digital channels, we observed that there's at least 86% increase in the number of transactions when we do aggressive digital promotion, especially if the marketing initiative or the promotion comes from the channel itself. So it's really, really quite effective. It's very cost efficient.
Okay.
So
sorry to cut across you. I think just to leave time for enough questions, if I could ask for you to kind of wrap things up a little bit.
Yeah, sure, Richard. This is my second to the last slide already. So next slide, please. So just some key lessons that we want to share. So in terms of product, it makes sense to offer bite-sized, simple insurance products because there's no agent. Relatively, there's no sales agent that could explain the product complexity to the customers. So the more that they don't understand the product, the less chance that you get them to buy insurance from you. For the customers, we observe that channels actually cater to their own market niche. As presented, we have about 2 channels that are quite similar with each other, but they actually sell the top selling products to these platforms actually differ from each other. And in terms of distribution, we encourage that you rethink the way you communicate with your customers. This is something that we're still gathering a lot of lessons from. There's no agent basically, so you have to think creatively of how to, communicate the insurance benefits to your target market. So that wraps up my presentation. As we say in Filipino, maraming salamat po.
Thanks, Gay. That's great. So there was a quick question from someone called Number One. I'm not sure if they're part of the James Bond set, but their name is One. And they had a specific question, which is, are the $2 premiums per year, per month, what's the time frame for that $2 kind of average spend?
Yeah, actually, our 1 month product is less than $1. It's 20 cents, $2, and the $2 product is good for 1 year, personal accident.
Okay, good. And then the other question, Gilles, yeah, I'm going to allow you to be the broken record. Are there any specific women specific products or products that were designed specifically for women that are sold through the Cebuana, either through the pawn shops directly or through the digital partnerships that you have?
For the digital partnerships, we're actually coming up with a unique product for women. We're hoping to get that out in the market in 1 to 2 months. For 2021, at least from 2020 to 2021, we're it's a COVID response. So we came up with a set of products that has some sort of assistance when you get infected with COVID. So
okay, good. Okay, so now we're going to shift gears a little bit. Thank you so much to our panelists. Really interesting presentations, did a great job, and kept to time as well, which is good. So now we've got 20 minutes for questions and answers. There are a number of them already which have been asked and which the panelists have answered because they were so specific. that that it made sense for them to answer them directly. And then there's some others that I've tagged that we'll answer live, because I think that it'll be interesting to have a panel discussion around those ones. And I also have some questions, as you might imagine. So maybe Bala, Kate, if you could put your videos back on. Super. I'm going to take them in quite a random order. I do apologize. The first one I want to talk about is an interesting question, which has been asked about whether or not there's a price point that applies to these digital channels. So, I mean, certainly it's been my experience, for example, when we've worked with telcos, that if you want to collect the premium from airtime deduction or from a mobile wallet, we've certainly noticed in our operation that if you go past about, it depends on the country, but if you go past about $1 per month as a premium, the collection rate dramatically reduces, right? So whether it's if it's below $1, then the collection rate seems to be fairly elastic, whether it's 90 cents, 70 cents, 60 cents, doesn't seem to make too much difference. But once you go past $1, there's a dramatic fall off. So when we're looking at these kind of digital channels specifically, and so when I mean digital channels, I mean the ones like the telcos, like the e-commerce platforms. Have you seen a price point above which you really, it's not suitable? You can't sell that product because you can't collect the premium. Has anyone got experience on that?
Yes, Richard, I'll give my answer to that question. You're right. Totally agree to that. And the data shows that over 90% is under $2. We have difficulty pushing products when it goes above 1,000 pesos. So that's about $200. So customers
$200. No,
yeah,
$2.
No, $2. $20. Sorry. So 1,000 pesos, $20.
Yeah.
So yeah, Filipino, at least for our market, it makes them hold on to their money a little bit tighter as compared to 100 peso and below.
Sure. So Bala, India is famously price sensitive, Bala. Have you seen when you're using these digital channels like WhatsApp, is there any evidence? I mean, I know on your WhatsApp chat that there's different products and different price points. Have you seen that the WhatsApp channel is more successful at a certain price point? Bala, we can't hear you or see you.
Richard, there is some network issues at my end. Can you please repeat the question?
Sure. The question is have you seen through the WhatsApp channel any clustering of sales at a specific price point? So, is the digital channel attractive for lower value or higher value products as compared to, say, the shops?
Okay, I guess here we have not tested that because we went live just with one product, because we were more keen on designing the process to make it as simple as possible. So the product that we went live was one of the easiest products to actually issue, because we didn't want the process to be complex. So the price was not the concern. The concern was more about designing the process. And the product that we launched was a low ticket size product. So I guess that was a combination of both.
Okay, good. All right, good. So I'm going to keep it moving. So there's a really interesting question here that I don't want to avoid from Stephanie. I'm going to paraphrase the question a little bit, but essentially what Stephanie's asking, and you can all read the question, what Stephanie's asking is that these digital channels, bring their brand and their payments mechanism, their ability to collect premium to the table, but they certainly charge handsomely for that ability to reach customers, to leverage their brand in terms of trust and to collect the money from the customers. And we've seen, I think she's probably referring to, mobile networks that often charge somewhere in the region of up to 50% of the face value. So, 50% of the premium that someone pays could go to the MNO, to the mobile network operator. And that leaves very much less money to go towards risk and therefore to the product. So is that then an issue in terms of customer value? So I'd be fascinated to hear, what people think. I mean, Kate, Max, if you want to come in, or if not, then we'll hear from the others. Yeah, Max.
In Latin America, the mobile operator want the 65% of the revenue share. So it's almost impossible to try to do something with the guys. So we try to select very carefully our alliance to try to to get a real value for their customers, not only a business. Because if some guy asked me the 50% of every ticket, I need to push the price of the policy, and I don't get our mission or our goal. So try to select the alliance, and in a young market like us, it's like put the value on the client, put the first experience, and try to get, okay, this is the 20 or 30% of the ticket. It's okay. More than that, it's not a real value for us and for the client, because we don't expensive products only for satisfy the other customers or the other enterprise, you know.
Okay, good. Kate, do you want to touch on this?
Sure, maybe I can touch on this.
Would have grappled with, right?
I'm not a private sector player, so I have not negotiated with the distribution partners, so that's not coming from this. But from our research, I think what we've found is also that it's the bigger, more established players probably that charge these quite high commissions. So your MNOs who have millions and millions of customers. And our research in with digital platforms and remittance service providers, they seem to be asking a much more manageable premium because they don't have exactly the same type of customer base in terms of numbers that an MNO might have. So maybe my advice here would be to work with distribution partners that have potential, but maybe haven't reached that scale yet, because many of them will also see the insurance product offering as a benefit for them and their customers. So for instance, if you're an e-hailing company and you're offering an insurance product which covers personal accident, and there's a payout, then the individual will likely come back to the platform quicker. So think about ways that you can make it clear that there are incentives, clear business incentives for the distribution partner to have some type of insurance product on their platform.
Yeah. So, I mean, I think this has certainly been something that we've grappled with. Anyone who's been around the industry long enough will know that I've, personally been heavily involved in dealing with mobile network operators since 2009. The way we looked at it was, what would it cost us to create the brand, to create the customer base, and to create the payments piece if we were going to build that from the ground up? And what would that cost per client that we imagine we're going to onboard? And then let's look at the cost that the mobile network operator is going to charge us. And then does that look fair or not? And it is going to be a high percentage. They will charge you a high percentage for this. And then you have to work out whether or not that then results in good customer value. And to some extent, that's fairly subjective. Okay, good. I'm going to keep moving the conversation forward. There's lots of good questions. So there's one here which came in right at the start. Claudia, thank you for being patient with us. Claudia asked, do you think that the distribution has to be through a partnership? So we've been talking here a lot about like B2B partnerships, largely business to business partnerships where we partner up with someone like Gcash or, your own channel might be, for example, the pawn shop is a good example, or WhatsApp. And Claudia, I think, is asking, can we sell directly to the customer? So I don't want to spend, I would like a kind of tight answer to that from the group. So obviously some of you have tried to do that. It's fairly expensive, right? Selling insurance directly house to house. And that's why I guess people have tended to go with B2B partners. Any of you got a kind of different view on that?
I think I'm going to have part of a concise answer, and then I'll let another panelist come in here. But I think that we have seen successes in this, particularly in South Africa with Hollard, who developed brick and mortar shops with their actual logos and many different parts of the country where people could walk in and actually purchase the insurance. And that actually has been quite successful here. It's not the only way that they sell, but it is one of their major distribution channels. So I think that it's not necessarily the end all and be all. It's part of the distribution strategy, not the only one, particularly as Richard mentioned here, the costs associated with it.
Sure. I mean, certainly from my standpoint, it's always been a case of what I need from a distribution partner is I need their client base, I need their brand. And it's really interesting listening to the panelists. A lot of people are talking about the fact that Gay, for example, mentioned that people come to the pawn shop and the secondary sale is the insurance. They didn't come for the insurance, they came for the pawn shop or remittances or e-load, and then they were, insurance was mentioned to them. And I think that's a common thread that spins through this. Frequency of use from a large number of clients is equatable to trust, right? People trust the pawn shop because they go there. People trust SBI because they're banked with SBI, right? Like, so all of the examples that we've listened to today have been where clients already have a relationship through that B2B partnership, and then they're sold insurance. So large number of clients that trust because of frequency of use. And the other thing that's really consistent across all the examples we've heard today is that there is an in-baked, frictionless payment mechanism. There's a way of collecting not only the first premium, that's the easy one. It's the second and the third and the fourth premium that are going to be difficult, because that is going to happen when you're not speaking to the client. That's going to have to happen behind the scenes. And so there needs to be a kind of very frictionless way for those payments to be gathered. And I think that if you look at the examples that we've seen today, that is consistent across all of those channels. So I think that's why people go down this B2B route, because then they don't have to recreate that themselves. They can leverage that from these B2B partners. So, but a really good question. All right. I am going to ask, the next question is from number one. Now, number one is actually Dominic from Allianz. So he's not actually part of some kind of secret society of James Bond. Probably just was a bit early for him, and he couldn't put his name in. So number one, you asked, Dominic, you asked, put a quote, which is, you can digitize the full value chain except the sales process. That's a really interesting proposition. So, but there's clearly examples here, from our presenters where actually there's somewhere where it's partially digitized, the sales process. There's somewhere it's reliant on shops. So for example, Max, relying upon shops, it's not digital at all at the point of sale, right? So I think Max might well agree with Dominic, whereas Gay and maybe Bala might disagree, because it's actually, the sales is being done entirely digitally. So where do you see that tension? Where do you see those pros and cons between a person actually making the sale versus what can be achieved over a digital channel? Who's feeling brave? Max, yeah.
I think they're both complementing, because the interaction face-to-face, it's not only important to sell, it's important to get the data, the collection data, to build new products, to understand better our customer. And it's very important, because the digital only, maybe you lose some little thing about the routine or the pain zones of the client. So the face-to-face reinforce that. And the digital, of course, we did the B2B2C model to escalate and have the volume, but we built the trust necessary to get better negotiations with other providers. After that, put in the right place, talk with the right people. In Argentina, exists a lot of cooperative who have the informal activities in that kind of segments, and for them, it's very important to see you, to trust in you, and they know you don't run after a sale the first pulse. So the complement, the two things, the face-to-face and the platform, it's important to get the omni-channel and collect data, be better on your process and on your product, and get better selling and collect payment, because it's very important, like you say. You can sell a lot, but if you don't get the payment, it doesn't serve to nothing. And the challenge is that it's get better in every process.
Sure. So Gay, you're doing both, right? You're doing sales at the shop to people that come into the pawn shop. You're also got entirely digital channels, and Pranav was absolutely right. Bala has demonstrated that you can go entirely digital in the sales process. I would argue that a lot of my life in the last 20 years has been about going entirely digital as well. So I'm fascinated to hear Max and others talk about using shops, which to me just seems really, a really expensive model, but clearly, operating in markets where that's the way to go. And I really respect, that model, but we've been entirely digital. So Gay, where do you see this kind of this trade-off between, in-person selling and digital selling?
There's actually quite a disparity in terms of relationship. For the pawn shop branches, we have deeper and longer relationship with our customers. So there's a better likelihood that, customers will buy again the product. For digital, you have to put investment and effort in retaining that customer. So you can actually offer products of longer term or better value if they just purchase that 1 month personal accident insurance at first purchase. And sometimes when the first touch point is on digital, um, it's a very interesting customer behavior is they would actually get in touch with you for additional queries or inquiries, or they would inquire about how to claim after buying the product. So those are the things that we are learning at the moment.
Okay, good. I've got to ask a quick question, Kate. I didn't ask it to you when you gave your presentation. You highlighted that one of your examples. You highlighted the remittance channel as being, one way that distribution. I've always felt that it's like the most obvious channel, right? There's a person who's living away from their home country. They're worried about lots of things. They're worried about the risks they face. What happens if I lose my job? What happens if I have an accident? What happens if I get sick? They're also worried about people back home because they know that if something happens back home, they're going to get asked for money, which they're going to struggle to get, right? And so they are really aware of. They should be the most obvious people in the world. The diaspora should be the most obvious people that we should sell insurance to. Why is it that we haven't seen more of these remittance channels as a way of distributing insurance?
Yeah,
I've got an answer, by the way, as you might imagine, but I'm fascinated by what you think.
I'll take a first stab and then you can come in because I'll be interested to hear your perspective coming from the private sector. But for me, it's a clear, like one of the most obvious ones. The whole why it's not in place more. I mean, I think there's many different reasons. One on the side of if you're trying to sell an insurance product to a migrant in one country, but the product is actually underwritten in another jurisdiction because it covers the receiver. First of all, there's very big regulatory and jurisdictional issues there. So that's the main issue on covering a receiver, because the remittance service provider is in the sending country, right? That's where they're licensed. So lots of regulatory hurdles there. But on the sender side, I mean, there aren't any regulatory hurdles. You should be selling to migrants. I think we've actually had lots of conversations with insurers and remittance service providers recently. Insurers are knocking on the door of the remittance service providers. They just seem too inundated with too many different things to think about insurance first. And also, if the individuals really trust the remittance service providers, and it would be their brand on the line if something didn't work out with the insurance product. And I think they're very worried about that because there are many different types of remittance service providers out there, and trust is key in keeping their customer loyal. So I think that could be one of the main things why there's a bit of hesitancy. And to be honest, in some respects, I don't blame them on that.
Yeah, no, exactly the same as what you experienced. It's the concern about damage to brand, and it's also concerned about where the regulation should kick in. Should it be where the person is in New York, or should it be where the person is in Cape Town, or both? And therefore there's concern over that, and the potential implication of getting it wrong is why they don't. But it's a really fascinating channel, and someone will crack it one of these days, I'm sure, and it will be huge. Okay, so we've got 2 minutes. How best to wrap up? I think probably best. I really like Jonathan's question. So, how do you think InsurTech will impact distribution? Or I mean, okay, I'm gonna broaden it, Jonathan. Forgive me. Kind of like to the panelists, what do you see as being? If we came back in a year or 2 years' time, what will be the innovations? What will be the things that we'll be talking about as being kind of the new ways of distribution? And of course, if you feel that InsurTech plays a role in that, then of course you can include that, and that will help answer Jonathan's question. But more broadly, it doesn't have to be just InsurTech. What do you think will be the main kind of drivers to change in distribution? What we'll be talking about in a year or two from now? Gay, I'm going to go with you first. Ladies first.
First, I think it has to have with product that responds with the current need. So there's this gig economy that we're talking about, people that are not, they are not employed by companies but are doing freelance work. I think this particular segment is not covered. So we have to come up with on-demand products with more price flexibility. And second, since we're doing this tech brick approach, we have this physical and digital platforms. We have to, make sure somehow come up with an omni-channel solution to make the experience uniform or seamless for our clients.
Good. Okay, then quickly, Max, and then Bala, if you're, but I don't know if Bala's still here. I think you may have dropped off. So Max, maybe you could just give us your view.
I think we will see a totally open market, and everyone can buy an insurance product everywhere. But the detail is going to be and the design of the new product for the new market, and that's going to be the most important things, because if we are open to see new markets and satisfied segments, we can do better things and we get real value, and the distribution. It's gonna be there because there are a lot of people trying to do new business in new products. So the detail is get real value in new products for a specific segment.
Okay, good. And then Kate, do you want last word on this one?
I can quickly say something that I hope that we're having a slightly different conversation than we are right now. Based on the previous years, I think that we'll be having a similar one with a bit more nuances. I mean, I think really for me in getting distribution right, it's speaking to the incentives of both the distribution partner and the insurer. And when those can meet in the middle and use the new types of technology, I think that's where we'll see some pull and push. But I mean, I think that a world with everyone being insured is probably not in the near future. And I think also thinking about how to bundle insurance products with risk management more holistically and broadly and other types of value-added services is really key, because I mean, Richard, to echo your point, no one wakes up in the morning wanting to buy insurance. So how do you sell it with something else that someone actually wants and is thinking about?
Right. Okay, good. Thank you so much. I hope it's been an interesting panel. I do apologize for those people that asked really insightful questions, especially Manoj. I wanted to get to yours, but I'm afraid we ran out of time. So back to the organizers, who I'm sure will tell us where we're going next.
Thank you, Richard, and thank you to all the panelists for this really great discussions. And to me, it's always interesting to see also in a presentation or in some pictures, how is it actually looking like the WhatsApp communication and all the other examples you showed. It's also interesting to see that, yeah, everyone talks about digital, but there's a company that is building shops. So maybe the combination of both is key. We have another session where we'll discuss really the importance of having the direct contact with the customers later. Now, how do we continue? Well, first of all, it's lunchtime. And then afterwards, we start with the Jamaican part. The Jamaican part starts at 3:30 European, Berlin, Luxembourg time. And then there are 4 sessions hosted by the Insurance Association of Jamaica that will run up until midnight our time. And I'm really excited about this combination of not giving up the conference in Jamaica entirely, having a first start there, and then hopefully have the conference in Kingston next year. So thanks to all the panelists for joining. Thank you, Richard, for facilitating, and I see you at the next sessions. Thank you.